Hi. So again, let's answer the question today. We had a good fall yesterday. SGX Nifty is actually indicating a gap down. Now, what happens to the market if suppose let's have two scenarios here. Number one, if we open below 9800, which ideally we should. There is no rocket science here. But then what happens if we start sustaining below 9800? And even actually if we close below 9800. So the level is 9780 to 9830. This is a 50-point range. This is the most important range for right now. A range which has given a lot of conviction for the last 2 months to traders that they can go ahead and comfortably ride their positions around these levels. The markets are not in a mood to actually break these levels, and rather in a mood to actually go to much higher levels, 10,500 and more. Like there has been a lot of position building around those levels also. So now the answer here is that if actually we break these levels, we actually start trading below them, sustain actually trading below them, then close actually below them. That would imply that the trading range actually will expand for the next support level 9550, 9690. Now, a lot of conviction is that perhaps 100-point lower is actually a good support area. So, which means that 100-point drift is very easy. So, if you go down below 9800 because of gap down, because of weak global cues, US North Korea tensions, give any sort of reason, but I would also attribute that to three very important factors, which, if you are a retail trader, if you're not an institutional trader, then you should be really wary of, be cautious of. Number one, it's a Friday. A lot of brokerages are going to actually give margin calls. A lot of position squaring off will happen. A lot of debit readjustment will happen. So again, and why that's important? It happens every Friday. Why it's so important? Because mid caps, small caps, those have corrected very sharply. Over the last 3-4 days, a lot of volatility basically has been seen, and that implies that because of volatility, because of sharp cuts in small caps, mid caps, a lot of retail traders, they would have got actually affected. Now, which means position unwinding can really actually dent the sentiment. Then again, after that, why it's so important this time? Because there's a long bank holiday. So between 12th and 17th, or rather 18th, you hardly have actually one trading day. And also there are like hardly I don't think so any more than one day actually would be the banking day. So perhaps there's a long settlement holiday, which also implies that perhaps some lightening of positions is naturally expected. So you have to be really cautious. So what's the texture of the market is buy on dips. But then the question is, when do you want to actually buy on dips? Which dip is the one actually where you have to go and buy? And that's why the answer here is that perhaps that's in my view that it's much better to let the current dip pass away unless and until we actually really see a big massive cut 200 to 50 points, and that gives you really good opportunity in the stocks which you were liking and you wanted to buy. That's a totally different ball game. But then just for the Friday sake, I think we have to be just wary, just wait for the markets to tell us. Just be on the sidelines. Bank settlement holiday, some position squaring off, weak global cues. So in this scenario, normally you would prefer to just be light, just have cash saved for your purpose, and just see what is happening in the market. And then, but most important, like an eagle, start basically looking at the stocks you wanted to buy and start looking at their prices. In such a scenario, it's always good if the prices are falling rapidly and they start becoming looking really attractive to you. Then you start applying your mind. So perhaps I think that's the strategy I would be applying. Now, in terms of Bank Nifty, I think 24,000 and then I go to 23,800. Those are the levels which I'll be looking for. Yesterday, basically, there was a very sharp swing trade in ICICI Bank, and because of that, we saw a good recovery. So, last half hour recovery was seen in mid caps, small caps, and also in Bank Nifty. But I won't read anything much into it. I will just simply look at the screen today and this morning for any sort of assessment about how the markets are doing. In terms of short positions, I think we are starting with bearish positions in Sun Pharma, highly risky bearish positions. Results are expected to be weak, but then again, the stock has already fallen a lot. Then you talk about Tata Motors, the ADR actually has fallen a lot. So again, and also we are moving into the trade today with good short positions at the close of yesterday. Again, then Cipla, and then you're talking about there are a host of other stocks that are mostly short positions there. Yesterday, 90% of the market, about 40-50% of the market was seeing short build up. The rest 40% of the F&O market was seeing long unwinding. So 90% of the market actually was not looking good. So market breadth is indeed very weak. So now the only I think good point here is that the gold is moving up. So perhaps gold stocks could be the one, but those are usually high beta. I'm not suggesting you to do anything about it. IT stocks some saw actually some good buying, largely a defensive play. So the point here is there is no reason to actually see why there is if there is some long build up somewhere there. Perhaps it's a day of holiday. It's a day where we just have to see the screen, just have to see what is happening. And if you have position that you're really concerned and you are trying to understand what answer I'm trying to give you, then the answer here is it all depends. If it's a long term investment, then you have to tie it out. It's more about the sentiment correction, more about a sort of panic which is settling in. Now, because of SEBI order, the two stocks, J Kumar Infra, Prakash Industry, those are going to start trading again. And who knows? I think they were good by not trading for some few days, and now they're coming back into trading. They could be seeing selling pressure because again, perhaps some FIs would not be liking to hold them now. So, and also if a lot of cash, a lot of liquidity is coming in terms of SIPs also, so perhaps mutual funds would like to deploy cash, but then perhaps they would also be thinking if the market correction deepens, then perhaps they should also keep some cash for some redemption. So I think that's what I'm trying to tell you. That is 1 or 2 days. Just see if the market is in no mood to correct further. It's a good time, but just spend your time and focusing on few select stocks which you always wanted to buy. That's it. If you're doing your homework, then I think you should be fine because the levels are going to come to you, and when they come to you, just take them with both hands. So with that, see you next time. Have a good, patient, profitable trading day, and just hold your nerves. Take care.